we are democratizing that so we can give the opportunity to the small player.
Hi, everyone. Thanks for joining us on this episode of Purpose-Driven Investment Podcast. Today, here I have my friend, Alexis. How are you today?
Great, super excited. You know that we were talking about this in Monterey, California. And the reason why is because I was invited to come to an event here for the Latinos community in the DMV area. And Shinyi immediately invited me to do a podcast. And I was like, yes, let's do it.
And I know you're here joining the meetup, and you've been very successful running your own meetup as well. And you recently just finished your workshop.
So what happened is that I've been doing real estate for 30 years, but very involved with the English-speaking community. But at some point, I was invited to speak at an event for the first time for the Latinos community, and I didn't know what they were doing. They were doing big stuff. So I was amazed about the things that they were doing, to the point that I felt, the word is not guilty, but I feel the responsibility to close the gap that is right now between them and the resources that we see all the time in the English-speaking community. They don't have the knowledge because it doesn't exist out there in Spanish.
Right.
So I started to go to this event like back to back, almost every month since then for the last 2 years. And people started to ask me about, how can I buy multifamily? And I see a couple of them buying multifamily assets without knowing what we know.
What to do?
Oh my God. And that hurts, right?
I think that's so interesting because we're very fortunate that we speak good English. We have access to some knowledge, some community, some resource just because we're kind of bilingual.
Correct.
I speak Chinese, fluent, born and raised as well, and you speak fluently in Spanish. So it's very interesting for our eye to see what we have access to versus the people who just don't know how to access to that. So that's so great that you start doing that. And I've seen great success. I noticed that nowadays a lot of your marketing material or workshop is geared toward to them 100%, right? It's all full finished.
Actually, I researched a lot before doing it.
Right.
Because I wanted to make sure, I was like preaching, this is the first time bootcamp multifamily in Spanish, right? But I wanted to make sure that I was preaching the right thing, right? I didn't find anything in Spanish. So I feel proud that it's the first time does a multifamily event, bootcamp. No, not it's not an event, it's a bootcamp. I told them we were like drafting numbers with pencils and paper, like we were doing the thing and calling brokers. Anyway, the whole thing. And it was very successful. People joined other groups out of that group, and other groups were formed out of that group as well. They're buying deals, they are submitting offers, they're talking to brokers, they're doing the thing.
I think that's so great that you decided to do that. I have the very similar experience as well. Like a lot of time you have to be in the right room talking to people who know the stuff. So I think that's so great that you decided to do that. I have the similar experience, right? A lot of people who speak Mandarin that we are not privy to that information. A lot of multifamily syndication information that's here, it's open to certain type of community. And you basically help breach the door to open the door for them.
Correct.
Right.
And they told me that. They said, wow, just yesterday I was talking to them about funds, debt fund, equity fund, maybe stuff that for us is, very common. And I told them, this is very common in the English-speaking community. And they were like, is that exist?
Yes.
Is that real?
It's real.
And yeah, it happens every day. I'm involved in many groups that they are talking about capital raising, the stuff that you do on a daily basis, eating food, that's normal for them.
Let's talk about the debt fund. I think that's a really interesting topic that we can kind of explain. Are you currently have any debt fund, or are you doing any project that you raise money for?
Yeah, I'll tell you more context of that because I'm setting up a hybrid actually. It's a debt and equity fund.
Oh, okay.
But the story behind is that 2 years ago, Vina, Jerry Norton, Pace, they did a hotel summit in Puerto Rico, right?
Yes.
So I went to that event and I met a guy, his name is Sharif. He, very cool guy. He owns a lot of properties in Puerto Rico. And when I was talking to him, he says, I knew about what an equity fund was, but I didn't hear before about a debt fund.
Right.
So he explained me, or he told me the story, when he went to Puerto Rico, he started to buy a lot of properties because he set up a debt fund in Puerto Rico and he was raising capital from the US to that debt fund and buying properties. And I was like, debt fund? Wait a second, that's a loan. These people people are lending money to you as a debt? And he says, yes. Interesting, because that way I can cap the interest rate and it's not based on performance. That was my mind at the time during the conversation. So I can cap the interest rate. It's not going to be based on performance. Of course, if I'm performing 20, 25% cash on cash, I'm promising them 12%. I keep the difference. That's the thought that I had. I run into Vina immediately and I asked her and she said, yes. He explained me the whole thing and she said, actually, you can split a fund in shares. Like you have like class A for fix and flip, class B for multifamily, class C for different asset class. And I was like, oh, interesting. But she said, go to Nick and talk to him. And I talked to Nick and he explained me the whole thing, which is very interesting. But the challenge that I faced though is that I wanted to set it up to raise capital from the US, but I want to give the opportunity to people in other countries, especially in Latin America. I'll tell you a story. Months before that, a friend of mine, he lives in Mexico. He's a mechanic and he called me one time like literally crying, desperate. What happened? He said a guy broke in and they stole in Mexican peso the equivalent to 100 grand in US dollars. And that took me years to say.
To save that much.
And now I'm scared. I have $50,000 left over under the bed, under the
Not
mattress.
the bed anymore. Yeah.
But I want to invest that money into the US market.
I see.
So there's a lot of uncertainty in the Latin American market, not only because that type of thing, but also politics, economic things.
I want to emphasize that. I think a lot of people, especially self-employment people, they come from a different country, they save and save and save. They have a lot of money, but they have this intrinsic distrust of the government or any authority. They like to stash their cash somewhere they feel safe. But fortunately, that's not a vault, right?
Correct.
That people can break in and steal it. People can come and take it. It's not secure against the hard asset.
Correct.
Right.
So that conversation inspired me to set up the fund. Yes, capital raise from here from the US, but also from Latin America. But I phrase, it's possible. And that there's another way to do it. You can do a regulation S and, there's many strategies that you can do it. But the back end, the admin stuff, it's time consuming. I didn't want to get involved in a lot of things. I'm in a stage of my life that I'm looking for the easy button. I didn't want to get involved in, many admin stuff. So I put that project on pause until I started to hear about Fractional.
Fractional. Okay, great.
Yeah.
Let's talk about fractional.
In the beginning, I didn't want to, because I already have done 2 syndications. I know the paperwork and the admin stuff that you have to do on the back end. So I was like, wait a second, Fractional gives the opportunity to the small guy to invest at least a minimum of $5,000,
Right.
which is cool.
Method though. So before we dive into fractional, we have to talk about the comparison, right? The compare against the syndication. So let's spend maybe less than a minute to explain what is syndication. I think a lot of multifamily deals now, they're on the market. They're what we call the syndication fund. What does that mean?
In simple words, it's to set up a fund that you're going to raise capital to buy an asset. There's different strategies to do it, but the 2 more common ones are 506B and 506C. 506B for non-accredited investors, 506C for accredited investors. So going back to Fractional, I didn't want to set up a fund. When I hear about Fractional, I was like, that's cool. Because usually in syndication, the minimum amount of investment is 50 grand.
50 grand. That's
Yeah.
the amount usually. And there's
Usually.
a lot of bigger deal that the syndicate fund, like 200, 300, 500 units, they like to see at least 100 grand
Yeah.
a piece.
And it's a 506C, which is for accredited investors, right?
Correct. So it's kind of limited to the people what we call more like a wealthier type of people. A couple filing jointly, you have to make at least 300K a year, and then other income combined. So it's not an easy entry. So it's not for everybody.
So I saw a barrier there, right? And for that reason, I was like, okay, so Fractional is cool because Fractional, a non-accredited investor can invest in the fund. And also the minimum amount is 5 grand. That's cool. However, in my mind, I was like, yeah, but you know what? I'm not going to raise $5,000 and then on the back end deal with a lot of paperwork.
Yes. Paperwork
It's not worth it. Until I talked to an operator that she told me she did a Fractional and she told me, no. They do the back ends. You just capital raise and you are an operator. That's it. And I was like, okay, that makes sense. So I jumped in on a one-on-one with them and we started the process. However, I wanted to do something different. Everybody's doing either debt or equity. Some said setting it up. It's a hybrid. It's going to be based on two phases. Phase one is going to be debt. Phase two is going to be equity.
So I guess the debt is when they come in as a lender, lend you as a bank. Equity is when they split the profit with you when they...
Correct. So the strategy is we're going to buy distressed properties on purpose. We're doing co-living, right?
Right.
We're buying distressed on purpose because we want to rehab their property based on our own design.
Purposely built certain...
Exactly. So during that phase is going to be the debt phase. So people that are investing in the fund, they're going to get a flat return every month based on the debt or the money that they're investing in. Once we complete the rehab phase and now we get a DSCR loan, we are not going to pay them out. Now we're going to roll over that debt into equity. And now they're going to own not only one property, but all the properties that we buy on the same fund, they will own them all, partially ownership, of course.
Okay.
And they're going to get their dividends based on net income. And once we sell or refi the property based on capital gain, they're going to get another portion of it.
Oh, I see. So it's almost like start the lender, and then once you refi your project out, that's when you have another lender, traditional lender now cover your debt, right? Then they will get the profit split, like cash flow maybe? Monthly
Cash flow and the capital gain once we sell.
Yeah, so capital gain once you sell. Okay, so that's starting with the one project. Let's just say you have another project coming in, same thing. Would you segregate these group of investors coming on the second one, or do you kind of recalculate like a universally the profit share?
The goal is to buy 1,000 rooms in the next 5 years. I don't think that I'm going to buy the 1,000 rooms in the same fund. We don't have a specific amount right now, but right now the goal is to keep the fund open to buy 2, 3, 4, 5 deals. I don't know how many right now, but at some point we're going to close it. Let's say that we buy 5 deals in the same fund. Now everybody in the same fund get distribution out of these 5 properties.
Oh, I see. Okay, and where's the market that you currently look at?
Atlanta.
Atlanta. Ooh, that's a great market. I heard a lot of great things.
It is, and I know the market. My team is in Atlanta. I have properties in Atlanta. So many things. Why Atlanta?
Oh, the star has aligned.
Yes.
And know everybody.
Next year, I think that is the Olympic Games. There's something big coming up next year.
Yeah, it's a booming city, I would say. That sounds exciting. So it sounds like it's a different investment strategy, not the traditional syndication that's open only, typically for the wealthy, but for the regular crowd, like young people making small guys, and your barber on the corner, your stylist are on the corner. So the minimum contribution is $5,000, and they can get onto the project they're interested in.
Yes, I mean the maximum. There's no max, but the minimum $5,000.
I see. What's the benefit of people going into your investment club? Do you offer them any additional education or kind of promote this community of yours?
The answer is yes, and it's not only because I want to do it. I mean, I want to do it, but also the way that it's set up, you have to do it. It's kind of like a requirement. So now, because they are members of the club, one of the things that actually we're going to do is we're going to vote on the properties that we're going to buy. There's no way, let's say that you're a member, there's no way that you can vote if you don't know what you're buying, right? So that requires me to educate them. So that way, when we're ready to buy, let's say the first property or the second or whatever the property is, we're going to vote, and now they're going to be educated and they can make a decision based on the property or the underwriting or the process.
I like that. So they have active involvement as well, rather than just like get the money is like head it off.
Which is very common in syndication.
Exactly. Syndication usually like give me the money. I know you don't make any decision. I make the decision.
Yes.
So that's why I don't really like that. I decided to step away from that as well, because I want, like you are sticking a lot. Like we're essentially operators, so we like to operate the asset ourselves. We like to do value add, to force appreciation, run project to make sure that it's a moneymaker.
It's a win-win for everybody, right?
Yeah, exactly. Win for everybody. Awesome. Well, how can people find you, Alexis?
So the simple way is through social media, which is Alexis Jimenez PR. Jimenez with J, not with H. J.
Jimenez.
Alexis Jimenez PR. Instagram, Facebook, and YouTube.
Okay. I will make sure I include your Instagram handle on the bottom. Any encouragement or word of, advice you can give it to anybody just trying to get into this space?
Yes. So there's a lot of people out there, and I see them all the time. They want to get into the business, but they don't have the experience. They have the money. We both learned that the hack is when you are in that position, the best way to do it is to partner up with another operator that has the experience. But at the same time, a lot of people have more than $50,000, but what about the small guy that doesn't have the $50,000 and wants to invest in, right? So I have this type of feeling or mission that I want to democratize this and give the small guy the opportunity. Even, we have seen people with $100,000, but even if you have $100,000 grant the bank account, but you are not a accredited investor, you cannot invest in the fund, right? And the 506c, right?
Yeah, it's not about how much money you save. It's about what's your income potential. That's the way the IRS look at it. Because they essentially look at it, well, if you make enough money, you should be smart enough to make a smart decision, basically. So that's how they kind of utilize that 503, 503V to kind of categorize if you're accredited, meaning you kind of know what you're doing, versus non-accredited. Okay, they need more protection, so we're going to put out more restriction on it.
Correct.
Right?
And now we are democratizing that so we can give the opportunity to the small player.
Awesome. I love that. All right. Well, thank you for joining us.
Thank you for
Wait,
having me. All right.
Good luck.